Hi, my name is Ranjit Singh and I'm the CEO of London Stone Securities, and welcome to this week's US market analysis. Okay, so in the past couple of weeks we've been talking about three major events dominating the US. Number one, the devastating of the Federal Reserve. Number two, the US-China trade relations fiasco. And number three, the state of the US economy. Despite all that appears logical, sensible and rational, which would be for a softening in equity prices, the Dow Jones and the S&P 500 continue to not only impress, but to surprise. The problem is that the data coming out of the States is still unclear at best and highly conflicted at worst. It's confusing everybody from the small private investor right the way to the top to the professional hedge funds, so nobody really seems to know if things are good or bad. And of course, with confusion comes uncertainty, and where there is uncertainty, you will see volatility, which is exactly what we have seen since the start of the year. Let's take US retail sales, for example. Last week, the December numbers came in at minus 1.2%, which was the worst fall since September 2009. That would suggest a significant weakness of economic activity towards the end of last year, and specifically a softening in consumer spending. Now, that's potentially a big problem because consumer spending accounts for nearly 70% of the total US economy. And if you break the 1.2% fall down into its numbers, online sales dropped by 4%. That was the biggest drop for over 10 years. But there were also falls in sales right across the board. That included, for example, department stores, furniture shops, restaurants, bars, and there was even a 5% fall in sales at service stations, which incidentally was the biggest drop since 2016. However, what is even more worrying is that some analysts are beginning to question the validity of the data and are suggesting that it might be slightly off because, of course, the data release was delayed by almost 1 month because of the closure of the Federal Reserves. Now, I'm definitely not in that camp just yet. I think if we get to a point where we can't even trust the data being published, then I think we're all in trouble. But it does show the uncertainty again. In fact, it reminds me a little bit of the kind of rhetoric that we saw and heard before the 2008 crash. But let's not go there just yet. However, I will say this. What does worry me is the fact that the retail sales numbers in 2018 fell outside of the forecast range, not for the first time or the second time, but for the 5th time. And if you see the graph, it didn't just miss the range slightly, but it pretty much fell off the chart altogether. The fact is that consumer spending is a result of confidence, and it's one of the key drivers for the economy, for businesses, and it's also therefore an indirect driver of equity prices. If people stop spending, that's not good for anybody. But let me end on a positive note, which is this. The trade talks last week in Beijing between the Chinese and the Americans seem to have had some positive impact. Although the two parties still can't agree on some of the key issues, China at least has said that it's looking to increase its purchases of US semiconductors and other goods. So, like I said, it's not all bad news. I'm not sure how that's going to help the US consumer spending problem, but it is a positive all the same. Thank you for watching. I will see you next week.